Wells Fargo's Mike Mayo is out with a bullish note on the banks, another one because he's already very bullish. But now he's raised the price targets on a couple of banks to street highs, which is interesting in and of itself. Bank of America, the target goes to 60 from 55. JP Morgan to 210 from 200. Joe Terranova, who says, quote, in our notes, I'm massively overweight financials, and they're powering this market post-earnings. So you have a vested interest in all of this, Joe. What do you think about? Now, the price targets don't go up all that much, but nonetheless, he's bullish on the space, and so are you.
Without question. And it's been really the source of alpha generation in 2021, going beyond technology itself. Just go back and think about when a 10-year Treasury was 1.12. That was the time to really aggressively allocate towards financials. I think the surprise here, Scott, is that post-earnings, there has been such a strong follow-through that's caught the analyst community and the investment community off guard. I don't think either one of those expected it. Now you're seeing a little bit of a capture where they're beginning to embrace not only the bullish sentiment that's being created, but a lot of the bullish earnings that were being reported, and you're seeing the investment flows going specifically towards there. So this is about money center banks. Bank of America, I own it. I completely agree with that call. But this is also about JP Morgan and USB. This is beyond just money center banks. This is about the exchanges. This is about a Charles Schwab, a broker. It's about ICE. It's about life insurance companies, Principal Financial Group or Regions Financial Group, if you want to look at a lot of the Regions banks. So financials don't have to worry about a rise in input costs that is going to pressure operating margins. Financials don't have to worry about the concerns related to low-income wage pressures. It is really, from a sentiment perspective, a tremendous opportunity to stay with these financials because we're nowhere even close to getting the universal respect towards the sector that the earnings and performance warrant.
Okay. Nicely said. You mentioned JP Morgan in that speech, but you don't own it. Why not? You got Bank of America, Morgan Stanley, Goldman Sachs, Amex, Blackstone, SoFi, regional banks. Why not that one? You singled it out.
Blackstone?
No, JP Morgan.
I think you left Blackstone out.
JP Morgan. I said Blackstone. JP Morgan.
No, but okay,
you said JP Morgan.
You got that on the list. I did. I said JP Morgan because JP Morgan's going to continue to move higher.
I know, but why don't you own it?
You can't. Because, I mean, it's like the 1992 U.S. basketball team, right? Not every player could be on the team. Look at some of the guys that didn't make the team. I can't own every financial there is. And then the exposure that I have with the quality momentum index increases my financials. We're overweight there as well. So I can't own them all.
All right. So it's the least desirable dream team member.
Okay. That's a good way to put it.
I own them all and Christian Laettner.
Okay. I was thinking that, but I'm glad you said it, not me. Okay? Okay?